Good morning. Good morning, everyone. I'm Bagadon, Stock Market Caddy. Today is January 20th at about noon. We're giving you a view of our swing machine, and we're having a modest week thus far. We're going to turn our program on. We're going to benchmark this with you, and we're going to let it run for a little bit and see how we do, but also give you an opportunity to ask any questions. I will be back in a moment as soon as we activate things, and we'll watch. Good afternoon, everyone. I'm Bagadon at Stock Market Caddy. Today is January 20th at about 12:13, 12:14. We're going to do things a little different. Today, we're moving back into our active trading mode, and we have some options on. We are short these markets on a position basis, but let me turn this machine on, and we're going to give you a chance to watch, and we'll see how we do. Whoops, bear with me. And where'd it go? We're going to trade the NQ. It's going to be, I think, fairly active, but we'll see. NQH 26, and get a little program running, and let's see how we do. Now, we never know, right? For the time that we're together, which is going to be approximately an hour, maybe a little bit more. We'll see. And let me arm this. So all the trades going in will be, for the moment, by the computer. Right, so it is armed. The strategy is on, and this is a beta strategy that we're working with, and looks like it would have done pretty well overnight. So hopefully it does pretty well from here with you. This is going to give you an opportunity again to ask any questions, and or if you want us to pull up any market, don't hesitate, right? And let's. We also made a little video on writing covered calls. So if you haven't seen that, you might want to. It's a fairly conservative. I wouldn't consider it real active trading. Fairly conservative approach. If you have monies that are parked in an IRA account or retirement account, it's a great way to generate income without a whole lot of work, without a whole lot of stress, and you just don't want to get carried away with it. And it's important that when you're writing the covered calls, that you're doing it in a market that is flat to up, like gold, like silver, maybe even oil in here, that sort of thing. In the meantime, we will keep you posted on any trades. Maybe we should make a note over here so that folks know. So we'll just do, let me just make a note down here. Let's put it in green. Strategy is running. It's a beta. Strategy is on, and we'll just encourage you to be sure to visit our website, not Websty, website to learn more. I think I spelled it right. Can't see it here. Let's go look here. No, I didn't. All right, let's go back one. There we go. Sound good? All right. In the meantime, we take a look at the 5-minute VIX is actually trending down. So this is a little, they may have trapped a few aggressive shorts here. Intraday, it actually is trending down. The 5-minute ES is long at the moment, underwater. The NQ went long 35 minutes ago. That's $2,200. The Dow is trying to get long here now, flat. The Russell has been sneaky running up here. It's had a hell of a return here in the last few days, last week or two. And 34 5-minute segments ago, up 1,300. Gold continuing to run. It looks like gold wants to get to 5,000, and it looks like silver wants to get to 100. And then from there, we may see a pop up, and then we may see a pullback. And in fact, that's the covered call writing we did was on the because we have members that put retirement monies into SLV. back some time ago, and others that have used futures, and so it's kind of like, well, what now? What can I do? And they're seeing their account grow and grow and grow. You want to be sure to capture some of those profits, or at least protect them. In one way of hedging some of those profits is to write some covered calls. We wouldn't go bonkers with it, but it is a can be an effective strategy for a market that has run and run and run. Any questions? Let us know. And the program is on. Let's just benchmark this. I got it on another screen, and it's a math problem, so it's really not a whole lot to look at. Um, there's nothing on the screen. Everyone wants to. There are these books out there, Trade What You See, and people. I'm kind of get amused. I find it a little bit amusing. I saw some, a thing come across, and a guy's, teaching candles. I mean, candles. Seriously, that's like 1975. It's like when I was in high school or something. I mean, it's really old, kids. You know. I mean, they got their place, but everyone, moving averages, stochastics, MACDs, that shit's really, really old, and a lot of it can get you into a lot of trouble. Quite frankly, it's got a play. They have places for it, but this is stuff. This is 2026, right? It's scary to think, but if you're in there and you're just learning because it's new to you, dojis and engulfing candles and so forth. And then what happens is, folks start extrapolating, and they may have a place for it with stocks on a daily basis, but then they start trying to trade it intraday. Be careful with that. That's all I get to say. Be careful. The NQ goes short here 12, 13 minutes ago, and we'll see. We'll see if the machine also gets on a trade here or two. And we're benchmark. We're starting at 41.4 is our beginning balance for this session. So we're going to try to do these little midday sessions now that we're back from vacation and back in the saddle. We'll try to have a program or two that's running so that you can see a beginning balance. I'm not suggesting that you follow these trades or you shadow those trades. Not a good idea. Even if you make a few, mad money bucks, what's it going to do in the long term? Not a whole lot, right? So you want to, you want to get yourself to a place, hopefully, where you're deciding to run the play. How about the game last night, right? I didn't watch the whole thing. I saw a few minutes of it, or actually more of the highlights. I didn't see any of it, quite frankly. I saw the highlights, the lowlights. Nice block on the punt. What the hell is that guy? He must have been betting on the other team. Jesus. The guy, one of the blockers. I mean, the guy just let him in. What a joke that was. That was terrible, man. Play all season and you got a guy that lets that happen. I mean, come on. I mean, high school player would have, all he had to do was just block, put a block on him. He just let him in. Terrible. And that turned out to be the difference in the game. But I don't know. That was somebody may have got to that guy. Any questions about who we are, what we're about? Don't hesitate, and we'll see if we get some trades off. Good afternoon, everyone. We did make a short video about writing covered calls. We chose the SLV, the silver contract or the silver market as an example. So if you're not familiar with writing covered calls, you might give it a look. It's just a preliminary. There's a ton of information out there about writing covered calls. But we show you how you can use a little bit of our tools, particularly Swing Machine. There are other tools that you can use, and if you get adept at doing it, it can be a trading strategy in and of itself, particularly in retirement accounts. Um, but feel free to give it a look. The key thing is when you're selling a covered call, you want to be doing it in a market that is going flat to up, flat to up, and like gold, like silver, like maybe oil down here. I think oil is going to get on its horse too. We are short these markets. The Nicholas timing model is short, and we're respecting that, and we are short. Now, once you get short on a position basis or long, no one really knows, how high something is going to go or how low it's going to go and how quickly it's going to go, right? You never really know for sure, especially on a position basis where you're going from a few days to a few weeks. So you want to, brace yourself, prepare yourself, plan accordingly, and and try to get away from making decisions on the money. As long as you understand, just widening this out here so we can see the euphoria column. But I think it was a great opportunity as the market the last week or 10 days as the market was just sitting up there at the highs, particularly the S&P and the Nasdaq, to have gotten some option trades on that go out, at least 30 days, maybe 45, 50, 60 days. If you are a slower investor, and that's okay, you might have wanted to hedge your portfolio of maybe out 90 days. I don't think it's too late. I don't. Because I think that we're looking at, I think it's going to be really, really hard to get past the month of March, or January, February, March, really this first quarter. I think I think it's really possible you could be seeing at least a 10% pullback. I mean, you might be seeing 20, 30%. There's something with the gold and the silver move that nobody's paying attention to. It's extreme, the silver, and and I think it's a flight to safety, and somebody knows something and is preparing, and you know, so it's good that you're in those markets. If you're in those markets, you want to stay in those markets. Don't come out. I wouldn't come out. Let me put it that way. Not giving a specific recommendation, but I wouldn't come out. You might around the edges sell a covered call or two around the edges, but don't have to. But those markets are just rock solid right now. I think the S&P, I think the Nasdaq, on a short-term basis, we're seeing it right here, right now, a pulling back. But I think that there's something a little bit maybe more at play here. I don't know what it is about the Ides of March. That's when Brutus killed Caesar. Around March 5th, there sometimes is a watershed in the markets around early March. The dot-com market bottomed on March 5th. The 2008 crash, I have to think back. Was it the crash or the bottom? I think it actually started on March 5th or 6th. No, and then the liftoff came also to 2009, 2010. The liftoff came around March 5th. So it's not a guarantee. It's not a just hey go get short because of March 5th. But we'll see. We'll see. And but right now I like what we're seeing because we are positioned short on the S&P and on the Nasdaq, and we've done so with options. Now the program is running. We just haven't had any trades, and it's going to be. Where did that guy come from? Okay, sorry about that. I got that double. I got an extra window open. There it is. I don't know why that opened. But all right. So we'll keep you posted. It isn't running. We could be running Swing Machine, right? We could. We're choosing. We keep a view of it up, but we're choosing to run this beta program. Brr, I tell you what, I don't know where you guys are, but it is chilly down here. Whew, man. I just had to take a look at the temperature in the house. It's 66 degrees. We got it set at 65. For us, that's chilly. It's not much warmer outside. Brrr. I'll fire up the fireplaces. Man. We don't play golf if it's below 70. Can't do that. Oh, man. I think they had some snow up in the Northeast, didn't they? That's what I'm hearing from family. Yeah, like 6 to 7 inches of that white stuff yesterday. Stay warm. This market, yeah, it's nice volatility. Nice volatility. So the program is on. Do I have it? Your sessions beginning balances. I should. Yeah, beta strategy is on. Right. So you know. Let me just highlight that. I guess. So the nice thing about program trading, algorithmic trading, like, auto trading, whatever you want to call it. Um, we call it automated trading. Is it can keep you out of the market, and here we go. So you know that it's on. Maybe I should highlight that in yellow. Oh, I can't do it now. But so it can keep you out and it can keep you in, but it is on. It is on. Swing, and of course, Swing Machine is always on. It's not always going into our account, but it is. Let's take a look at the ES. Right. Let's take a look. And if you want to see the ES, let's slide over here. Remember, we can go over here and see the pivot information. So here is the pivot. This is the daily pivot. Excuse me. Here it is, 69.11. 69.11.92. That's the daily pivot. And she's under it. She's sitting on the S1. But that's the daily. What we might want to know is where are we on the weekly? And in that instance, what we need to do is change. So whether you're on a 5-minute or a daily, that pivot information on that radar that I just showed you on any market is going to give you the pivot information real time without even looking at a chart. And if you choose to, we can trade from that, right? We can trade from that automatically. But let's change this to a weekly because I want to know the weekly pivot. Where are we? And so the weekly pivot on the ES, as an example, is 60. That was high, huh? 69.78. 69.78. Do you remember that? That's where we were. Do you remember? And we were up at 70.34, and the R2 was at 70.91. So when we were up there at 70.30, 70.20, what were we doing? We were selling. I was like, Susie, we got to get our options on. We're too high. The rent is too high. Remember those things? The rent is too high, too damn high. That rent's going up there in New York, by the way. Rest assured, when the Marxists get in power, they tell you everything's going to be free. Suddenly, you get shortages and you get higher prices. It's anything but. But so we're down on the weekly, though. We're down below the S1. Whereas the S2, we haven't hit it yet. 68.65. The S3 is 67.52. And now this is just the weekly here, right? Don't confuse it with the numbers up here. This one right in here, this one. And what will happen is we get down there to the S2, the weekly. We're going right there now. Yeah, so we're just trying to get under the S2, and it may stall there a little bit, and we'll get some head fakes. We may get some bounces. So on a weekly basis, so again, this is the one that we set as a weekly. If you, when we were up in here and you got your puts on and you took them down, now you're looking pretty good. And I'm going to have to deal with Susie later in the day because now they're profitable and she wants her money. And I'm going to want to sit on them a little bit more. But let's scroll back and look at the intraday action. And that's what's so beautiful. Now you might say, well, wait a minute, Don. The weekly ES is long. What are you doing shorting? Well, we're traders, right? Right. So, you can do both, right? You can be, even within your own account, you can be long from an investment standpoint, and then short or hedge against your long position, right? Even Warren Buffett does that all the time. But let's put this back to a 5 minute so I don't confuse anybody that might be passing by. What I love about Swing Machine, what I love about this tool, and why we're always showing it, and it may not be fully understood, and it may not be fully appreciated. There's a technique to it, but it can save you from going from chart to chart to chart. Do we use charts? Yes. Do I have visibility on charts? Yes. But if that's all you're doing, and you're just looking at that precise moment in time on a chart, I don't know. Um, Let me know how that works out for you, but that's not really what we're doing. And anyone, remember all those calls that Bitcoin was digital gold? Remember when Bitcoin was at $127,000 a coin? Are you shitting me? And they were saying it is digital gold. It was a digital bubble, is what it was. Is. I mean, what's the percentage there? 127,000 down to 89,000. Not so good. Not so good. Scarcity. Scarcity alone does not equate to value. Right? Just doesn't. Again, we say thank you for stopping by. We got a nice sell-off taking place. We got gold going higher. We got silver going higher. We got oil holding steady at around 60. I wouldn't want to be shorting oil here. And so on a position basis, let's take a look at the ES on a 60-minute time frame. 45 hours ago. 45. That was 11 a.m. 2 days ago. I don't have the date column in here just to save room, but that's when that was. If you had gotten short there, if you did, at 69.78 on the ES, right? Which, where do we know? Where was the R1? Was at 70.34, right? So it was up there. If you did it with a mini, you're up $5,700. If you did it with a micro, you're up 570. If you did it with 10 minis, you're up 57 grand. If you did it with options, you're doing pretty well. You might even be doing better, right? That's on a 60-minute. What about you could go to a 120, you could do 240. Let's go to a daily. What do we got? On a daily basis, okay, so the daily went long 37 days ago, but it's dipping. It's just a dip right now on the daily. Right? So a person could have got long. Now, it would have been very profitable, of course, right, when I was up at 737. So Swing Machine doesn't get them all right. This isn't a red light, green light. You've got to have trading skill. So what one would have wanted to do if you had gone long 37 days ago, and you had done that with options, you had done that, any number of ways, as you got the short signals on the underneath, on the shorter time frames, you'd want to be doing what? You'd want to be shorting or hedging your long position. Right? And just because it shows a dip doesn't mean, I'm going to go buy the dip. No, not necessarily, right? Not necessarily. You would want to get a larger view on the trend, right? So that's what has to be taught or either learned or yes, both taught and learned and then applied. Let's put this back to a 5-minute. Let's look at the NQ on a 60. On a 60-minute, it went short 45 hours ago, roughly about the same time. It is ripping up against the short right now, but you would be up 78 with one mini, 7,000, almost $8,000. With a micro, you'd be up 800. With 10 minis, you'd be up 80 grand. Take the rest of the week off. I mean, once you become good, and if you have the capital, you have the time, and then you have the skill set, and you have the tools, why won't you just execute? Just execute. Oh, my phone's blowing up. Not sure what that's all about, but let's go to a daily view. And the daily NQ is just trying to short now. So it's losing its dip status, trying to get short now. So we're going to sit tight though. Nicholas, we showed you, that Nicholas went short on January 13th. Now, if you subscribe and you see the tool and it gets short on January 13th, well, it didn't go down immediately. It didn't go down the next day. Markets don't do that, right? And they don't necessarily. You have to have some patience, right? And some confidence. And the confidence I can't give you. Confidence comes from successful and practiced execution on your part. We can give you the tools, we can give you the education, we just can't give you the confidence. But you also need to know, and that's why we made the video that we made earlier today. You can get a chance to see it, like on the covered calls. to let you know there are other things available, beyond just stochastics, or always just buy, buy, buy. I buy it and I hope it goes up. I buy it and I hope it goes up. All right. And then you sell it. It does no good to buy silver at 22, see it go to, 23.50 and then, get out and never trade it again. I mean, what good is that? You know? Now, if you kept buying and selling it, okay, I get it, and you're managing your risk. I like this action. I like it a lot. Now, I'm going to give you, let me just take a couple of peeks at something. A lot of times, we'll go to point and figure, and we can get a really nice idea of where prices could be going. A very simple. And Susan and I have been using point and figure, by the way, since like, um, boy, a long time. Before there were computers, before there were PCs. I'm sorry, I got this goofed up here. Let me do it again here. So we're going to look at the SPY. Actually, we'll do the SPX, S&P cash. And let's get an idea from point and figure. We're going to give this a look, give you some idea. Yeah, I got to tell you, it's such a dangerous chart. It really is. It's what they call it's like a megaphone. It just exploding up on the high side and create on the downside. Um, it's an exhaustion pattern, right? So this is for the S&P and for the Nasdaq, but this is the S&P. So the S&P is exhausting itself out. And if this thing pulls back, now this could take days, could take weeks, but if it breaks 65.54, 65.54, which is, quite a bit down, right? In percentage terms, there is very little support. We will bounce or pause around 62.36, and then ultimately this thing's going to go back. It very well could, right, to 53.18. 53.18. How much is that? That's a bunch. Let's see, 10% on the S&P. We're trading at 10% is 680. Yep. It's about a 25-30% haircut. And the thing of it is, kids, the trend will still be up, but but nobody will want to buy it at that point, right? And then if the market gets spooked or people get, if everyone's, who bought up here, north of 6,000, they all decide to come out. Well, then we don't hold 53. We really break. And it could be like shit through a goose. It is so it is so extended, and they don't know what they don't know. They just think, it's going up. Okay. Um, Now I think that the people who do know were buying gold and silver the last 2 years. That's what gold and silver is telling us, that we're going to get a major. I'm not saying that it's right here, right now, right? We could rally back, and if anybody goes pouring in with tons of money, here's my voice, pours in with tons of money. Well, that son of a bitch, please, please don't do that to yourself, right? Don't do it to us. Don't, please don't, right? We don't even do that, right? We trade around it. But, I will have markers, right? So when I'll come in with options, knowing Susan's a little bit, actually not a little bit, she's a lot greedier than me, right? Susan, when it comes to greed and fear, Susan has more. This is a good, it's a good. Everyone has their own trading personality, right? So Susie probably, when I think about it, probably has a little bit more fear than greed, so it kind of balances out. But and I have greed, but not really, and I don't have any. I just don't have much fear. But we don't trade greed and fear, right? We don't. But sometimes, so when we're trading intraday, Susie's in her office, she's running her program, she's doing her thing, totally on her own, you know, and it is what it is at the end of the day. And I do the same thing, right? But on our position trades, we use options. So Susan sees that. And in fact, she places those trades, much of them. Many of them are hers, some of them are mine, and she shops them, gets the best pricing, gets them in, and then manages them. So she's aware of that. And that's where it isn't a conflict, but we can have a difference of opinion when the trades are particularly when the trades are really working out. And that's when Susan will be like, well, I want to take some of that bread. I want to take some of it. And I'll be like, well, I want to let it run. So knowing that in advance, I usually like to put on at least, or plan to put on at least two options or more, so that when that happens, I can satisfy, Susan's desire to take some off, and so we have enough so we can take some off, and then I can let the others kind of run. So it works out, right? You got to work that out. Now, if it's just you, that's okay, but maybe you want to do something like that too. But this is kind of like a megaphone pattern up here on this point and figure, and it's an exhausting pattern, and it's very, very dangerous right now up here. So I'm looking at the S&P. I know we're trading, at 68. The S&P is around 68.34. So those are the futures. So we're looking at a pullback to 65.54, which is 300 points. And if you got a put there, and we get to 65, it's going to pay 30 grand. And if that bitch breaks 65.54, we're going to 62.36. And if we break that, we're going to 53.18. And if you're fortunate enough to have some puts on and you have some patience and you know what you're doing, then you're going to feel pretty good. If you are balls to the wall long, your portfolio is long everything, and you are pouring money into the market in late December and January here, then you're gonna you could be the cannon fodder that pukes this thing out at 53.18 and drives it down into the S&P into the 4,000s. We get a 50-60% decline. Now, what will be the reason for that? Who really gives a shit, right? Who cares? I don't care. But somebody will attach a meaning to it, right? You know that, and they'll blame Trump for it. I mean, it'll be something he did. It'll be I attacked Venezuela. I took over Canada. He took over Greenland. It's the tariffs. It's this. It's that. It's something he did. I mean, it's ICE. It's that. It. I mean, they just, he just gets blamed for everything, right? And it is what it is. But it doesn't really matter. If your portfolio is getting smoked, does it make you feel any better that that you understand why it happened? I mean, but you got to take action. And most Americans, I mean, did you see them all? Nothing against Indiana or University of Miami. I mean, I'm hearing stories that people were spending 2, 3, 4,000, 10,000 more for tickets of a college football game. Are you shitting me? Are you kidding me? Uh, I guess. Oh, a snowball in hell's chance I'm doing that. Nope, no way. But they do it. They do it. They also want to gamble too, right? We don't gamble, right? Everything is measured. Everything is, we're waiting for the machine to put a trade on. It'll take, and the machine, we'll work with it. It is running. I do want you to know it is running. We just haven't had a trade. Um, but yet they'll gamble everything. I mean, I see it, right? You see it too, like the podcast. I mean, they're gambling not just on the outcome of the game. I mean, they're gambling on the first quarter, or on the second half, on the third quarter. And, if the quarterback, falls down, or what his average yards is. I mean, they're fantasy football. They're gambling on everything, and it is a gamble. And then if you talk to folks that are doing that and you want to learn about the market, oh shit, no, I don't know anything. I don't want. You can't time the market. You can't. I can't do that. I can't do that. Right? Oh Jesus Christ. Oh God. But Davy Day Trader, is leading them to DraftKings, and they'll go from football season to basketball season to God knows what. Do they bet on baseball? I'm sure they do. I mean, just to be, oh, whatever, whatever. I think it's actually detracting from sports, especially college sports, but that's me, a little old fashioned. I remember when people used to just watch the game to enjoy the game. Now they bet on every aspect of it. They get pretty pissed off, if a coach does something, that, that affects the spread, right? Ah, it's crooked, it's rigged. He had a, oh well. I hope you're not caught up in that. This is a beautiful thing here. We look at the 5 minute ES. It went short at 12:30 at 68.81. If you did it with a mini, you're up 787. 12:45 on the NQ. And look at gold and silver. Just won't let them out. What I mean by that is anyone or any institution that is short and is hoping that they can buy, just to save them, they can't. And so what they'll end up having to do, if there's any big hedge fund or big institution, and it's just like GameStop, it's just like when they short the stuff, they're down there shorting silver, and it's fine to be doing that when no one wants it. But now that everyone wants it, then what do they got to do? They got to sell. They got to sell stuff that is working for them. So they might have to sell the Nasdaq. They might have to sell the S&P to raise cash levels to offset the squeeze they're experiencing on being short silver or gold. And then if they can't stand it, they got to come in and they got to continue to buy it. So even intraday, because of silver, and we've been saying this, it's unusual. Very, very aggressive traders can, when you get a short signal, can come in and short gold and silver. But you have to recognize that has to be an intraday trade, should be a fraction of the margin that you ordinarily use. You're going to do much better when you get a signal on gold and silver to buy, for at least right now, for at least this period of time, because this shit is balls to the wall strong. I mean, you can see it on any and all time frames. Make sense? All right. We'll let you watch. I'm Bag of Dawn, Stock Market Caddy. It's about 113, 111 actually, and we'll let you watch. We'll probably go to 2 o'clock. We haven't had a trade yet. I'd like to see at least get one trade off, but it's going to be up to the machine. And but whether we're up, down, flat, whatever it is, come 2 o'clock, we'll have to sign off. We do encourage you to visit the website, and you're welcome to call any day from 9 a.m. to 9 p.m. at 813-758-8263. We'll be here. Okay, so we're going to get another look too at the Nasdaq, and let's give you some real numbers here of where we are. It's a very ominous look. That's all I can tell you from a point and figure standpoint. This is on a position basis. The Nasdaq is currently trading Nasdaq. Okay, not the Nasdaq futures, but the Nasdaq Composite, 23,067. 23,067. The all-time high is 23,896. It also has what we would refer to as like a megaphone pattern. It's a bearish pattern. It's an exhausting pattern. This thing is coming back. The Nasdaq Composite trading at 23,000 now. Not talking about the futures contract. It'll go commensurate. I just don't want you to confuse the numbers here. But it's coming back to 22,000. And I got to tell you, it I don't think that'll hold at all. And when it breaks 22,000, it's going to go to 20,000. And I don't think that'll hold. The next stop will be 18,000. And the place where it would bounce. Now, this may take weeks or months, right? But then again, it's a fast market. It could be over. But we're looking at a pullback in the NASDAQ Composite from 23,067 right now to 18,000. That's 5,000 points. So if you own a shitload of NASDAQ stocks, you're looking, what kind of percentage is that? 10, 20, it's about a 20 to 30%. Now there's no guarantee, right? Don't want to, and there's no guarantee that 18,000 will hold. If somebody bought, and there are plenty of somebodies that bought this market in December and bought up here, and they go down 20, 30%. What do they do when they get down there? Do they say, "Oh, that's okay. Honey, I lost. I put $1 million in. I got impatient. I put $1 million into the Nasdaq. We're down, 400,000. But the guy tells me, not me, I should buy and hold, and we'll be okay. It'll come back." Okay, maybe he does hold. What if he goes down and that $1 million account goes to like 200,000? What's he going to do? It's okay, honey. It'll come back. Okay. He may spend 30 years for it to come back if he has it. But what if he needs it to pay bills? To pay for the second or third timeshare, or to pay for, this toy, that toy, this private education, that private, whatever it is. He needs that cash. They'll sell, folks. They will sell. They'll sell anything and everything that isn't tied down, including grandma. Very, very dangerous. Look here. We've been saying it. And it was a crazy scene there. Seeing an image. Anybody ever been to Alcatraz? That San Francisco water is like super cold. They're showing a coyote swam across the bay. I don't even know how it's possible, and landed on Alcatraz. Poor thing was shaking and freezing. I don't even know how he could do that. I mean, the water is so damn cold. I mean, that was unbelievable. You'll see it. You'll see it online. That's some of the crap that comes across your screens. So we haven't had a trade, an intraday trade go off. I could have easily, but in any case, we'll take a look at why that is. But it is what it is. It didn't trigger. So I would have liked for you to have seen it. But Swing Machine is doing it. 12:35 minute, you'd be up 1,500. 12:45, you'd be up 1,600. 12:40, you'd be up 500. And Bitcoin. It's not doing so good. Let's put Bitcoin on a daily. Let's see what's going on there. All right, so it went short 2 days ago on a daily. Mm, that's just gross. Hi everyone. I had stepped aside. So this is actually the first trade that the machine put on. Whoops, I was on my phone. It's getting a little bit of feedback. We'll see if it can complete a trade here. Um, all looking good. 5 minute swing machine, which is not what the machine did, right? But 5 minute swing machine, 1230. You're up 1800. Micro, you're up 180. 10 minis, you're up 18,000. 1245. One mini, you're up 1900. One micro, you're up 190. 10 minis, you're up 19,000. Get the drill. Here is the Dow, 1240. You're up 1,000. Same math. 145. The Russell. I think the Russell. I would be getting. I would be getting the hell out of small caps. I would. I think that was a also a signal. I think it was a dash for trash, and I don't think the economy can handle it. And look at the VIX. The VIX is moving up. So the fear is building in. And look at gold. Gold's, what is gold telling you? Gold's going to 5,000. When it gets there, it's really going to have all the headline news. CNBC never wanted to talk about gold. All they wanted to do was talk about Bitcoin. Where are they now? They let everybody. They're all very defensive about it. It's a problem. It's a big, big problem. Mm-mm. But I hope everyone is in one piece. Let me look and see if anyone's got any questions about what you're seeing. Let's see. Okay, I didn't even catch that. The machine did take a profit. Okay. Oh, there's another one. Then took a loss. All right. So it took a profit, then took a loss. Um, I'm sorry, I was talking through that. So we're net down about $500. Not a big deal. And we'll see if we get another one off. Once again, I'm Bagged On. This is Stock Market Caddy, and we're a mentor. We're a mentor. It's a mentoring service, and we're not a broker. We're not a financial advisor. We're not making specific recommendations to buy or sell anything. Um, we're trying to help those people that want to trade the markets actively on a swing basis, maybe even help with some investment, some technical suggestions and tools, and then certainly if you want to be trading intraday. Be sure to visit the website and don't hesitate to give us a shout. I'm going to let you watch for about another 5 or 10 minutes, and then we do need the screens. Look for us, the middle part of the day. Usually around quarter of 12 or so, around noon. But I am going to have to. Ooh, Ted, what happened there, buddy? What happened? Hit his nose. I'll be back here in a minute to answer any questions. Kenny, you gotta go pee? Oh, okay, they know what time it is. You guys heard me. We're gonna have to break away, and Ted's got to go. I got to take him, and and we also I have an appointment this afternoon, so I'm going to have to bring everything down. And I do want to say thank you for stopping by. We do these YouTube sessions to create some awareness, right, of who we are, what we're about, and to stimulate your ideas and questions. But I do need to turn down. and as well, we also do need the screens too, especially. We'll be back. I'm going to be back. I definitely want to be here for the close, but I love this action here that we having today. All right. So again, thank you for stopping by, and reach out anytime. Thanks.